We're joined by Mike Martinez, who is the founder and president of the Pension Group. Good morning.
Good morning, Kurt.
Thanks for coming in. So there is so much uncertainty, a lot of fear, not just with institutional investors, but regular folks like us. Sure. What should we be concerned about right now?
Well, I mean, everything is uncertainty. It comes down to really these tariffs. We saw yesterday they paused the automotive tariff, and the markets went up. Today we're hearing the futures are down 400 points, and it's a lot of uncertainty that's happening. It's not just the tariffs on Canada, it's Mexico and China. And you factor in interest rates and how that's going to play in. And, a lot of federal workers are losing jobs. Eventually, as interest rates keep coming down, I think that's going to be the catalyst to the market. But we are going through some growing pains. I know clients are nervous. We've seen it across the board. But, pretty much what we've gained at the beginning of the year, we've given up. So we're not quite in correction territory, but if someone's in, let's say, individual stocks and they're down 20, 30%, maybe they're too aggressive. And if you're getting closer and closer to retirement, like we talked earlier, the last thing you want to do is go back to 08, lose 20, 30, 40% of your portfolio, then you can't retire. So again, we develop strategies to really help people, bond strategies that are yielding 5.25% right now for the next 4 years to really help insulate and protect, because as interest rates go down, those CDs and money market rates are not going to continue to pay 3-4% like they are today. They're going to get lower and lower. But if you can lock in a bond portfolio paying 5.25 for the next 4 years, you insulate yourself from that risk and your principal's protected.
So are you encouraging people to get out of the market right now? Not
necessarily get out of the market, but reevaluate their situation. I know a lot of people, they kind of hide, put their head on their covers, so to speak. And this is the time to get with your advisor. And if you don't, if it's been 2, 3, 4, I've had situations where people says it's been 5 years since I met with my advisor. Shame on them. We typically do 2 to 3 reviews a year for our clients, and certainly if people need a second opinion, they can reach out to us.
I just met with mine last week, as a matter of fact. And we had a long heart-to-heart conversation about all of this because it's a scary time. What about people who are maybe just getting into the investment game? Maybe they're in their first job and they're having the opportunity now to start saving. What are you telling them to do? Well,
when you're younger, you're in your 20s, early 30s, it's like, let's be aggressive with that money. We manage a lot of money inside of 401k plans, and we said instead of putting it pre-tax, a lot of us as we get older, we've put everything pre-tax. Our pensions, our 401ks are probably our 2 biggest assets. And we really tell people, we tell them put everything in the Roth and be as aggressive as you can. Because they'll have dollar cost average, and they're going to have ups and downs. But over the next 30 years, they should be fine. But if we have 2 to 3 years away from retirement, how can we readjust the portfolio? We don't want to go totally to cash, but again, that bond strategy is important. Looking at individual stocks and bonds can be a pivotal way to reduce that volatility.
All right, so if people are interested in more information, where can they find you?
Thepensiongroup.com. Obviously we're on TV all the time. We've been doing radio for well over a decade now. So after 28 years, we know a few things to really help people plan for retirement. We manage a lot with inside 401ks and through Brokerage Link, and we can give them another set of eyes and give them more options than what a lot of employers do today. So really try to help those pre-retirees so they don't get into an 08 situation where I'm getting ready to retire, and then all of a sudden the market drops 20, 30, 40% or more. It's about managing the risk.
All right. Well, great to have you with us, Mike. Thank you very much.
Thank you, Kurt.
Good to have you. All right.